The World Bank has recently warned of a global economic recession next year, where central banks across the world have started raising interest rates to respond to inflation. This trend is expected to continue, and it is also expected to have long-lasting adverse effects. The recession is expected to hit the entire world, starting with the United States by the end of 2022, before spreading to the rest of the world next year. The current economic situation explains it all. With inflationary pressures intensifying and rising sharply, slowing economic growth, and aggressive monetary policy changes adopted by almost all central banks around the world, there is a high chance of a recession in 2023. In this video, we will see how the world will face the worst economic crisis in 2023. Keep watching. Just like the tides in the ocean, when the economy rises, it is known as economic growth. But when it falls, it is known as economic contraction or economic decline. An economic recession can be defined as a significant widespread and prolonged downturn or decline in economic activity. Recessions occur after the economy reaches the peak of its cycle and continues to spread, involving overall economic activity, lasting more than a few quarters. There is no specific method that can be used to accurately predict when a recession will occur. Meanwhile, the International Monetary Fund, IMF, does not rule out the possibility that a global economic recession will occur next year due to the high risks. The managing director of the IMF, Kristalina Georgieva, said that the outlook for the global economy has darkened considerably since last April, prompting the IMF to lower its forecast for global economic growth at 3.6% this year. In 2021, the global economy grew at a rate of 6.1%. According to the IMF, the spread of inflation is more universal. There are higher interest rate hikes, a slowdown in China's economic growth, and increased sanctions related to the Russia-Ukraine war. The latest economic data shows that several major economies, including China and Russia, have experienced a contraction in the second quarter, pointing to higher risks in 2023. Prolonged tight control of financial conditions will complicate the global economic outlook, but it is important to control the soaring prices. Not only that, the growing risk difference between fiscal and monetary policy and the demands of the countries to carefully measure their actions to avoid any opportunity for fiscal support affect the central bank's efforts to control inflation as well. All countries face the 2023 challenge. According to a study conducted by Macro Global Oxford Economics, the global economic situation is likely to worsen in the early stages of next year. The study expects that the United States, Canada, and most parts of Europe will experience a recession due to the combined effects of tight monetary policy, high inflation, and the energy crisis, which is expected to represent the lowest point for the region in the first quarter. Meanwhile, China's gross domestic product growth is also expected to slow down in early 2023. However, the same study also found that, if there are no adverse shocks, the situation in advanced economies may begin to improve by mid-2023. That is, with the expectation that most recessions will be relatively short and moderate. History of the global economic crisis. A country's relationship with another country is connected through various means, among which are the currency market, trade relations, and capital flows. The emergence of multinational companies also strengthened the international relations between one country and another. Therefore, when an economic crisis occurs in a country, it will usually spread rather quickly to neighboring countries due to factors of speculation and fear of investors. In history, the global economic crisis has happened many times. Among the world's worst economic crises that have ever occurred are the credit crisis of 1777, the Great Depression of 1929 to 1939, the Asian economic crisis of 1997, the economic crisis of 2007 to 2008, and the OPEC oil price shock of 1973. The most recent economic crisis happened in 2007 to 2008, and there are some who think that the global recession is a normal phenomenon that will happen every 10 years. The world economic crisis and cost of living. As the issue of living costs is now one of the main problems faced by almost the entire world, economists agree that among the biggest impacts in facing the world economic crisis is the failure of wage increases to keep up with the increase in commodity prices in 2022 and 2023. This itself has started to be felt in recent months, when the world seems to be facing a crisis in cost of living that has not happened for at least a generation, and this is believed to have something to do with the Ukraine-Russia conflict. With household purchasing power weakening, most economists expect poverty levels across low-income countries to rise, compared to 60% in high-income countries. The cost of living crisis has triggered concerns about energy and food prices. 3 signs the world is headed for a recession. Almost all markets around the world are now showing warning signs that a global economic crisis is approaching. The most important question now is no longer if, but when it will happen. According to a CNN report, there are 3 signs the world is headed for a recession. First, the big US dollar. The US dollar plays a very big role in the global economy and international finance, and today, it is much stronger than 2 decades ago. When the US central bank raises interest rates like what was done since March, it makes the dollar more attractive to investors around the world. In any economic climate, the dollar is seen as a safe place to invest in. Whereas in a chaotic climate such as a global pandemic or war in Eastern Europe, investors have more incentives to buy dollar, and it is usually in the form of US government bonds. Second, decline in purchasing power. The top driver of the world's largest economy is shopping. However, it appears that American buyers have become too tired to purchase after more than a year of price hikes on almost everything, with wages not keeping pace. Although business appears to have grown rapidly across all industries for the post-pandemic period, inflation appears to be slowing economic growth. This can be seen clearly when a FedEx company, which is one of the economic driving companies operating in more than 200 countries, has warned that demand is weakening, and earnings also seem to be declining to more than 40%. In an interview, the CEO had said that he believed the slowdown was a sign of an approaching global recession. Third, war, soaring prices, and radical policy clashes. The collision of economics, finance, and politics cannot be seen more painfully than what is currently happening in the United Kingdom. Like the rest of the world, the UK has struggled with price spikes largely due to the COVID-19 pandemic, followed by trade disruptions caused by Russia's invasion of Ukraine. As the West has cut Russian natural gas imports, energy prices have soared and supplies have greatly reduced. According to the Organization for Economic Cooperation and Development, OECD, the world economy will face a greater impact than previously predicted next year, and this is closely related to the effects of the Russia-Ukraine war. According to the OECD, the conflict exacerbated inflationary pressures when the cost of living rose rapidly. In conclusion, although the consensus is that a global recession may occur in 2023, it is impossible to predict how severe it will be or how long it will last. For large economies like the United States with a strong labor market and resilient consumers, they are expected to be able to withstand the impact of this recession better compared to other countries with moderate economies. Thank you for watching.